All right. What's going on, guys? Little technical difficulties here, but we're live. Nvidia earnings. Crazy day today. Crazy day today. The Qs looking like they're starting to ramp into the close here. Nvidia in particular didn't have the worst day. Currently trading up 4%, down off of its intraday high. NASDAQ, S&P 500 both green again after an intraday sell-off. Lot at stake here in Nvidia. We're going to be live for probably the next 30-40 minutes while Nvidia reports. We've talked about this extensively inside of TTI, but I don't want to say the fate of the bear or the bull market, rests on Nvidia. I don't think that that's fair to say, but I absolutely do think that after doing nothing for the last couple of months, particularly semiconductors, they have to resolve in either direction here. And it feels like with the indexes themselves really chopping around since December and not giving a clear indication of whether they want to go higher or lower, that this might be the straw that breaks the camel's back, if you will. I think there's two different ways that you can play this or expect this, I guess. I think expected range 141 to 142 to the upside, expected range to the downside somewhere near 115, 116 if I'm not mistaken last time I looked. It's a relatively wide expected range in Nvidia. I think that, barring some sort of catastrophic miss in earnings, they're probably going to be pretty good. Earnings are probably going to be pretty good. I think the problem, though, is that earnings are pricing in like perfection. And if Nvidia is not perfect, or even if it is perfect and it doesn't just absolutely blow everything out of the water, I think there's an opportunity for Nvidia to drag this entire market down. And if Bitcoin is any indication, we were talking about this, BTC is already breaking down here. Almost came down and tapped the 200-day moving average today, down near 80K. Is Bitcoin front-running kind of this growth breakdown? I think that's a fair question to ask. Is the liquidity in the market, particularly surrounding risk assets, leaving risk assets, and Bitcoin is the first? It's generally the easiest. And if that is the case, and Nvidia does not perform as well as the market expects, or maybe it does and it doesn't outperform, do we see these growth high beta areas finally really roll over? I'm not talking about ARC components, which, by the way, ARC looked fantastic all year. Last couple of days, ARC has got smashed. I think it was up something like 20% on the year, and now it's up like less than 1%. It's giving back everything in 3 or 4 trading sessions. Momentum in higher beta stocks just absolutely slammed. I'm talking the stuff that actually matters in the market. Nvidia. A lot of these semiconductor related plays that are hanging out. Does this earnings event potentially cause these stocks to finally resolve, whether it's higher or lower? I have no idea. And if they do, are we going to finally break out of this, this range that we've been in for the last 3 months? I would absolutely love it. I would prefer it to obviously go up, don't get me wrong. But what I would prefer even more is just some sort of resolution. Get the hell out of this trading range that we've been in over the last couple of months. Give us an opportunity to open up positions that are going to be trending again in the US domestic market. Right now we have a bunch of positions on in the international market. For those of you in TTI, by the way, I just opened up some more of the hedge in the Qs here just in case. They're cheap. I'm grabbing a couple of those that expire on Friday. Hope those hedges go to zero, because that means the broader portfolio should be up relatively large. But we have exposure into international stocks, so it's not like risk is rolling over in a totality. We have exposure in Chinese-related stocks. We had one of them that absolutely blew expectations out of the water today, up and over our price target. We turned this free XPEV. We have other Chinese stocks as well. XPEV is working better than everything right now. But we also have some European financials that we're looking to open up. We have we have a Japanese peripheral position that we're looking to open up today. We're looking at gaining exposure internationally. So it's not like, once again, these are riskier areas of the market. It's not like we're risk off at this point. We are seeing sector rotation out of growthier areas in the market within the U.S. domestic market. I wanted to show that, but for whatever reason, Koifin just doesn't want to load. I don't know if you guys have Koifin loading or not, but this does not want to load for me. It's not like risk is moving out of the market. It's just rotating in the market. It's rotating to international stocks. So is Bitcoin kind of the leading indicator here? That the growth trade in the United States right now is going to take a backseat to international stocks and potentially value-related stocks. It could. I don't know what the answer is. I think that's what makes this Nvidia earnings so important. With the Dixie back in the range, giving international stocks an opportunity to really rally here. Bonds are up multiple sessions in a row. I mean, it's a big deal with Nvidia because everything that should be working in favor of risk assets right now, with dollar down, bonds up, which over the last 3 years has been the winning combination, they are not responding. They're not responding. We have yields coming down and we have the Russell 2K tapping, or actually below the 200-day moving average. Like, that's not what you would expect in this type of environment where interest rates are falling. You would not expect the Russell 2K to be falling more, for sure. And yet this is the environment we find ourselves in. So it's complicated. It's difficult to maneuver through. Hopefully today we get resolution either up or down. Doesn't really matter which direction, but I think for most people, they would prefer up, including myself. The bounce on Bitcoin 200-day moving average feels like it's coinciding perfectly with the Nvidia earnings. Could be. I mean, it could be. It's all interconnected. You know, to think that these aren't interconnected is ridiculous. Particularly because Bitcoin trades 24/7, 365. It's never closed. So you get a lot more erratic moves, particularly in hours that are not dominated by U.S. institutional trading right now. You get very erratic and volatile price moves. And we just got two back to back. I mean, we broke 90K and we went all the way down to basically 80K in the 200-day moving average in a 2-day move. It's nuts. Super volatile. Once again, are they front running a liquidity exit across the broader market? I have no idea. So earnings here in Nvidia, they're going to be coming out. I don't know exactly what time. Let's go ahead and see if TradingView will give us that. Anybody know what time? It's usually pretty quick. TradingView says in 20 minutes, but we might get some information before that. So you're stuck with me for 20 minutes. 19 more minutes of yapping away. Yeah, some guys inside of TTI opened up. We have a couple iron condors. People were opening up thinking that Nvidia is going to be a nothing burger, which I guess is the other way that this thing could go, right? What happens if Nvidia doesn't do shit? What happens if we're just stuck in the fucking slop? Which, good. So they opened up some iron condors, some broken wing butterflies with exposure to the downside. A couple different ways that we played this. We didn't throw directional bets on Nvidia through earnings. I think that's a little crazy here. Yeah, if it did nothing and just continued to burn option premium. I mean, we were talking about this earlier today. One of the hardest things to do as a discretionary trader is to sit at your computer every single day and watch a market do nothing for weeks or what's been going on months. It just eats away at your mental capacity. It eats away at like your enthusiasm for the market, and it also eats away at your account balance if you're sitting in options plays that aren't necessarily built for, stagnant markets, right? Great numbers, earning. So wait, the numbers are out already? Oh, it's a preview. Estimates. Brian says Salesforce is out, down 9% back underneath the previous Pivot high here at 310. We were looking at potentially owning a position in CRM if it bounced off 310. So it looks like this is going to get put back into the watch list category. We didn't open up anything here, but we've been building a watch list of growth names. When or if the market wants to come back that we want to own, that are pulling back into levels that we can risk. And it looks like Salesforce back on the watch list underneath the 200-day moving average. We'll see if it continues to stay there overnight or not. But this is kind of a symptom of what we've seen time and time again through this earnings season. I don't have the numbers in front of me, but even when earnings were good or great, particularly tech stocks are just getting absolutely hammered. And CRM is the latest. Dom, do you have the numbers for CRM by any chance? Tell me if they're good or bad. You're the guy. Dom's our fundamental guy, for those of you that have never heard him speak. Smart guy. And now you have. Smart guy. Adjusted EPS 255, estimated 261, revenue missed slightly. Expectations 10.05 billion, revenue 10 billion, up 8% year over year. So no, that was Salesforce. So Salesforce missed. Okay. This is a completely different environment than what we've been trading through for the last like 2 years, by the way, right? Earnings are coming out, and for the first time, at least in the tech space, they're getting dumped hard. Like they're either missing or they're not at least up to the expectations that the street has, or they're like guidance isn't great, or it's just not enough. And so these tech stocks are just getting fucking pummeled. And it wasn't like this over the last 2 years. Now, I'm not saying that you degen through every single tech earnings, but generally speaking, even if the street didn't like earnings, a couple of weeks after, pulling it back, these things were right back up to where they were, if not in higher prices. So this is a different environment where the Cowboys over the last 2 years that just held beta through everything and ended up making a bunch of money. You're going to have to start switching your strategy a little bit if you continue to think that that's the environment we're in, because I think it's very obvious that the market is telling us that we're out of that. Diversification, the stock pickers market, back on the menu. It's not just buy Mag 7 and chill. It's not just buy ARC components and chill anymore. Unfortunately, those were great times. It's buy international stocks, buy material stocks. Healthcare. We just put a position on an Abivi a couple of days ago, right? It's the last time you wanted to put a position on an Abivi. All right, still sitting here waiting. Go ahead. I was listening to the Compound a couple of days ago, and they brought up a good point that even if the tech sector continues to do very well for itself, it could just be a case of they're too far in front, and they just need to slow down a little bit before the cycle needs to catch up again. That makes sense. That this market doesn't necessarily have to roll over into a bear market, but kind of the expectations for earnings got way too far for what's actually happening here. And I think that that's probably not far off. It's not like these earnings are bad, like you just said. They're just slowing, which means guidance the last time around was a little too optimistic. They're up 8% per year in revenue in Salesforce, so it's not like they're declining, but it's just not as good as what everybody expected. Sure, that makes sense. There's a couple good semiconductor setups if Nvidia does well. We have no idea if Nvidia is going to beat. We're not, permeable AI, buy everything in AI, everything's going to go to the moon. Absolutely not. But if Nvidia does well, and semi start to bounce. There are some setups that look attractive. I don't think there's a better setup right now from a risk reward standpoint than Marvell. All right, pulling back into the 94 area. This was a trade that we put on prior to earnings, and we were able to turn it free. Now, this wasn't a big winner for us because the market went sideways post earnings. But still, this gives you a level to risk off of. It looks eerily like CRM, by the way. But if it holds 94, I think you risk 94 for a price target of 131 and potentially 191. I think it's a fairly simple setup here that you can reload at 94 if it holds. You don't need to love Marvell. You don't need to love the semiconductor industry group. But this is a high R to R setup, right? You have an upward sloping 200-day moving average, all purposes. You're still in a bullish momentum regime. Looks like they report in a week, so you might want to, I don't know if you want to open it up before that. But if Nvidia does well here, there's some available semiconductor trades that you can put on. You know, TSM isn't that far off from their all-time highs as well. I could see TSM breaking back up and making a jump up towards 220. This is a trade that I still have on my books. TSM, as long as we're coasting above a 200-day moving average and the market is holding this in the sideways pattern, I don't want to get rid of it. I'm happy to be wrong below the 200. And Nvidia is right there too, by the way, right? Nvidia is only a couple percent away from the 200-day moving average. And you know, Paul Tudor Jones gave us one of the most important pieces of trading advice you could ever learn, and that's nothing good happens below the 200-day moving average. That's just a general rule of thumb. So if the semiconductor industry group, which has not done anything since June or July of last year, starts breaking down below the 200-day moving average, I think it's a signal to the broader market that there's some worse times ahead. And it starts with Nvidia. Let's see, looks like snow reported. I have no current exposure in snow, but this is just mindless chop here. This was an old favorite back in 2021, that series of IPOs, just mindless chop. There's an opportunity above 197 that I think we took a stab at, and it never paid us out. It was a free trade, but we didn't make any money off of it as it missed its profit target. But right back into the same range it's been in since 2022. It's up. Does it actually do something off of this? We'll see. Above 197. Let's see, any other ones that we want to talk through before Nvidia shows up? MGNI back to 1575.15. Looks like MGNI is reporting as well. Down after hours. The theme continues. These stage 1 into stage 2s just pulled right back in towards their overhead supply after sitting here for multiple months above it. XYZ is a great example of that as well. Block had every opportunity to make a statement. After spending multiple years inside of the penalty box, this stage 1 into a stage 2 took a crack above 85, and it just didn't work. Worked for about 2 weeks. Never was up to, was never able to de-risk off of that, and then post earnings fell right back in. It's been a tough earnings season for tech. That's for sure. Back to MGNI, some mid-cap software related name. Go ahead and talk through that really quick, Dom. I didn't hear that. I mean, it makes sense to me. It makes sense to me, right? I don't know. I don't think you'd have to convince too many people that that's real. But maybe. MSTR closed up today. Wild. That's wild stuff. MSTI closed up. Intuit closed. Big gap up to the upside. This is something we were thinking about taking a position on, but we never did. Isn't that ironic that a lot of these BTC related names had better days than BTC itself? Just as I talk about that, Mara had some sort of earnings as well. That little baby Mara. This used to be a hell of a trade. Mara and Riot were fun trades a couple of years ago, and they have just done nothing since then. Real pity. Workday's up, Intuit's up, but Salesforce is down. Imagine that. Nothing here on Workday, but still. IoT. Yeah, I don't trade IoT. This ticker is a doomsday bringer for me. I've made money twice on IoT and lost money 3 times, so I don't trade this. It's not a clean trend. I mean, if you look at it in hindsight and say it's coasting to 200, how can you not make any money? I challenge you to trade this name for an extended period of time and make money. If you do, you're an incredible trend follower and you have balls of steel, for lack of better words. But IoT has been a widowmaker for me. I've given back more than I've made from it. So this is a non-trade for me, IoT. Which really sucks because this is an AI bubble trade. We were able to identify this all the way back at the beginning of 2023 and just didn't make a whole lot of money. Oh, I did. I made a bunch of money off of it, actually, and then I gave it all back. It's even worse. Tesla's having a hell of a fucking last couple of weeks, man. Holy smokes. Can you believe this? Politics aside, 40% drawdown. 40% drawdown. It peaked the 19th. It is down 40% in 68 days. Absolutely insane. As we sit here and patiently wait, should be 5 minutes. I think 4:20 is when Nvidia releases their earnings. So for the next 5 minutes, we'll yap away at some semiconductor stuff. By the way, I want to bring up something that I think is important for everybody that's sitting here screaming that there's an AI bubble and that semiconductors are playing into it. Here's my rebuttal. Here's your equally weighted S&P semiconductor ETF, and we have not gotten anywhere over the 2021 highs on a consistent basis. Nowhere. If this is a bubble in semiconductors, it's the worst bubble of all time. It's not a bubble. At least it's not a bubble for the industry group. It may be a bubble for a group of particular stocks within the industry, but from an industry standpoint, a bubble, you should see like a majority of these things working, and they're not, at least in bubble capacity, right? We're right back to where we were in 2021. It by no means does this scream that this is a bubble in semiconductors. You can say Nvidia is overvalued all you want, but I think it would be wrong to say that there is a bubble. Okay, we got 5 minutes, folks. Mag 7 stocks continuing to get slammed as well. Not a great couple weeks for Mag 7 either. And yet the market is only a couple of percent off the highs. I think it's truly a testament for the resilience of this market. You have equally weighted NASDAQ that was just up at all-time highs a couple of days ago, down 4% off of its high. You have the S&P 500 equally weighted, down 1.77 off of its yearly highs. And yet you have Mag 7 stocks just getting absolutely slaughtered. It shows you that as bad as this market is, market breadth is not as bad as what people might lead you to believe. Mag 7 as a grouping down 11%, 12%. Obviously Tesla is leading that to the downside, but still, Mag 7 have not performed well this year, and the rest of the market has. So, $1 million question. Does the market catch down to Mag 7, or does the Mag 7 eventually catch back up to the market? What do you think? I don't know what the answer is. I know that while Mag 7 is lagging, you don't want to be opening up new exposure until there's some sort of reason to open it up. I think opening up Mag 7 exposure here in the face of better opportunities in terms of relative strength in international stocks is a poor choice with your capital, from a trading perspective at least. But I don't think the Mag 7 trade is over forever. eBay reported today. eBay is an old trade we put on. We want to talk about eBay, an old trade we put on at 51, targeting $60. We want to talk about chop. This was before the market was chopping and eBay just took the cake. We sat in this thing for like a month and a half or 2 months before it started to work. Building a base above 51, like watching paint dry, And then out of nowhere, it started to take off. And we were able to close out of that for over 100% profit. But talking about a trade that really tested your conviction and patience, the stage 1 into stage 2, and then it took 2 months, 3 months to really get going. Part of the reason why we like to buy a lot of time on these trades, you don't have to time them perfectly. If you have time on your side, we were able to get out of this for over 100% profit. Looks like they reported and they're down slightly. I wouldn't be surprised to see a majority of these things happen. I mean, it's the theme so far this year. Tech stocks are just getting slammed off earnings. Expectations are just way too high. Got about 2 minutes, folks. Message from one of the Discord members. I had Grok do a deep search on X for Nvidia mentions and also to predict the ER outcome today. It did say something interesting, though, that it could barely find any mentions about DeepSeek affecting Nvidia ER. DeepSeek, I don't know what to think about it. I know that obviously immediately the market did not like it. We saw essentially the entire AI bubble peel off quite a lot. But then over the course of the next couple of weeks, 2 weeks, I think, most of those components had filled their gaps and were right back up. Problem is, over the last week or two, they've started to fall off again. So is the DeepSeek news priced in, or is it legitimately impacting the valuations of these AI bubble trades? I've seen both sides of the camp, that DeepSeek would eliminate the AI bubble trade, that it makes it, insignificant. And then I've seen the other side where DeepSeek is a bunch of liars and don't trust them. And I don't know what to make of it other than the fact that gaps are filled and we're down lower than where we were prior to DeepSeek. So. All right, we got less than a minute here. See the fate of the semiconductor industry group, right? Either way, it doesn't matter which way this goes. As long as we get a resolution and we can put new trades on in markets that are trending, I think most of us will be in a better spot. See which way this market wants to take it. Assuming ER is out now, immediate response is nothing yet. Market was slight down, now it's slight up. Algorithms must be just fighting each other. Let's put this on the 1 minute. Let's see these guys duke it out. Look at that candlestick. Who wins this one? Who knows? See where we're at. Somebody have the results? Feel free to post them in the Discord. I'll read through them. As of right now, we are marginally up. We have a couple guys that bought some iron condors on this thing, and I'll tell you right now, I think the most frustrating resolution of this would be Nvidia does nothing. Continues to burn premium off of people that are trying to place short-term bets in the market, and does not give us a resolution in either direction from the indexes. I mean, that's like the worst case scenario. If this thing dumped, at least we'd be putting shorts on and playing to the downside with a cleaner breakdown. A break up would be great too, because obviously we can continue to ride the trend higher, but nothing feels like it would just be the worst. All right, earnings are out. Here we go. Reading them from our favorite account ever to follow, Zero Hedge. EPS 89 cents, estimated 84, beat. Revenue, data center 35.6 versus 34.09, estimated beat. Nvidia sees first quarter revenue 43 billion plus or minus 2%. I cannot believe that this market is right back where we were. Yeah, I mean, it's a beat, but the problem is Nvidia priced in, earnings priced in perfection. And they beat for sure, but did they outperform? Like, are they doing anything crazy? This candlestick went all the way up to 136.5. It's heading down to 124. I don't know which way this market wants to go. Maybe it wants to wait for Bill to hop on or not Bill, excuse me, Jensen. We're talking about Bill Huang. Jensen hops on and starts talking about the future of Nvidia. Maybe that's what the market's waiting for. But as of right now, this is hilarious. This is the worst possible outcome for people that are trading options on this. Unless you're in some iron condors, congratulations. But man, what a nothing burger so far, and just zero resolution on the major market indexes as well. They're just, man. I have no idea where Nvidia is going to be later today. It could be completely different. We could be up 10% or down 10% after the phone call. I have no idea. But I'll tell you right now that both sides are going to be fucking mad if Nvidia doesn't do something. Yeah, that candlestick is wild. That's funny. The Qs are up after hours. The S&P 500 is up after hours. Materials up. Mostly everything is up slightly. This is hilarious. I don't know why I expected anything different from this market. This is the same goddamn thing that's happened for the last 3 months. Nothing. Like, nothing. Nothing has happened for 3 months, and now we have the pinnacle of companies reporting and nothing happens. I feel like we're fucking trading through, like, we live in the severance world. And this is our own fucking purgatory. Excuse me for swearing. I feel like this is, like, we're underneath. We're the innie right now, and we're just, every day we're sitting here staring at charts where nothing is happening. What's the quote? We do meaningful work. Meaningful and mysterious work. We watch Nvidia move 1% after hours. Majority of companies beat quarter guidance because analysts want to keep their job and keep management happy. More about its guidance. I bet it doesn't stay where it's at in an hour from now. Yeah, you're absolutely. Yeah, I think you're 100% right. 100%. I can't say 100. I'm saying 99. Setting underwhelming expectations is the way to keep your job. It's safe, right? It's the same thing when you go on FinTwit or something and people go, this thing could go up or down. Like, yeah, no shit. Thank you. Where's the alpha? Plant your flag in the goddamn ground and tell me if you think it's going up or down and give me some supporting evidence. Don't say it could go up or down. Of course. That's the safe answer. That way you can retweet it and say, look, it's down, or look, it's up. Same thing in sell side. Okay, well, hey, NVIDIA's not doing anything here. We've been live for about 40 minutes now, so I'm going to hop off live, and we'll see if NVIDIA ends up coming around. I have no idea. It certainly looks like they're waiting for Jensen to hop on and start talking through their earnings. Maybe the most important thing, and arguably I think the most important thing, is guidance, right? What are they going to talk through in guidance-wise? Welcome to the second nothing burger of NVIDIA's earnings. I think last time there was really nothing either. Imagine that. Well, my name is Hamilton. I'm here with the Trading Initiative. Welcome back to the second round of NVIDIA earnings where the market doesn't do shit. We'll see what happens over the next hour or two when Jensen speaks, and we'll talk about it tomorrow. We'll figure out pre-market where this thing is going and whether or not it's going to be impacting the market. If you like this type of content, I would love, regardless if NVIDIA hasn't done anything, I would love a like, subscribe if you're not subscribed, and a comment below. I'll answer any questions you guys may have if they're relevant to what's going on. I hope you guys enjoy the rest of your Wednesday, and I'll see you tomorrow for whichever report comes out tomorrow. I think Beartrack's report, right? Beartrack's report comes out tomorrow. We're going to be looking at some of the worst stocks in the market. If NVIDIA dumps after hours and we're looking at things to short, tomorrow's report is going to be fantastic for you, okay?